So we are going to understand the type of accounts, okay, and what are their default balances, okay. So let's do not write it, okay. So first of all, we have actually five type of accounts in the accounting as a subject, okay. Assets, expenses. So I'm writing down the similar type of, or we can say the accounts which have similar balances together, okay. Liabilities, capital, and revenue, okay. So we understand that what is the meaning of asset, expenses, revenue, capital, liabilities, okay. In general terms, asset is the amount which is recoverable from the customer, okay. Expense is the amount which we incur to run the business, okay, like raw material, printing, cartage, like that, okay. Revenue is the term which we use to refer like sale of goods and services to the customers, so it give rise to the revenue. Capital is the investment amount which is done by the owner into the business, and liability is in contrast to assets. Like in case of assets, we have to recover the amount from the customer. In case of liabilities, the business entity has to pay off to their suppliers, okay. Now let's come to the type of balances, or we can say the balance, okay. So default balance I'm going to write. Some of you may ask that why assets and expenses have debit balances, okay. Credit balance, okay. So first of all, let's understand that. First of all, take just a note of it, that asset and expenses will have always 99.99% cases debit balance. Liabilities, capital, revenue will have credit balance, okay. Some of you may ask that why assets and expenses will have debit balance and why liabilities, capital, revenue will have credit balance. So it does not need to be comprehended. Why that? So because it is it is a science, okay. It is a science that accounting practitioners have practiced so far, okay. So we do not need to pose irrelevant logics that why do we have debit balance and why do we have credit balance for different type of accounts, okay. It is just a methodology. Like in science, there is a concept of gravity. You cannot ignore it, okay, to solve many problems in daily lives. That is why we have debit balance and credit balance, like that, okay. Now let's come to the closing, okay. So whatever accounts, okay, whatever accounts will have debit balances will be close to their respective accounts, or we can say their respective destination accounts, by giving a credit to them. Let's say suppose we have purchased an asset, okay. So every asset will have a debit balance, okay. So to close that account, we will transfer that balance to another account by giving a credit to asset account, okay. So, or alternatively, we can say that to close any account which is having debit balance, we will just credit that account. Okay. And whereas in case of credit balance, we will give a debit to that account. It is just opposite, that's all. Okay. So now what we have, so what I have written here, for every expenses, if we are having a debit balance, so to close that account we will give a credit to that account. Okay. So for our current case, for any type of expense, let's say insurance expense, rent, printing, salary, any type of expense. Okay, any type of expense, they will be having debit balance. So to close down all of these accounts, we will just give, or we will credit those accounts and give a debit to income summary account for closure of respective accounts. Okay. So for the current case, our choice has been identified, or the correct choice has been identified as choice B, that is rent expense, because rent expense will be credited to give a closure to rent expense account, and income summary will be debited. Okay, that's all for our solution. Choice B is the correct answer.